Welcome to the complete guide to reverse mortgages that I have put together. My name is Anthony Fata and I'm a licensed mortgage agent at Owl Mortgage. In this presentation, we're going to go over the following. What is a reverse mortgage? Who is eligible and how it works? When is the loan due? An example of a reverse mortgage and the numbers behind it. Why you should consider a reverse mortgage. Common misconceptions behind them, and lastly, the steps of obtaining one and the fees associated with it. Before I get started, I wanted to share a quick story with you all that was recently told to me by one of the primary banks that offer reverse mortgages in Canada. I will try to make it as short as possible, but basically an older lady obtained a reverse mortgage in the amount of several $100,000. The amount is irrelevant because she may not even use the full amount. And she did this because her husband had passed away several months earlier, and her expenses had gone up approximately $400 to $500 a month, which is quite hard when you're on a fixed income. She obviously looked at the option of selling and renting, but wanted to remain in the home where her husband had passed and where they grew old together. There's an emotional attachment that the client did not want to let go of, which is totally understandable. Nonetheless, the product not only allowed her to stay in her home, but she imagined a day where she knew about this product earlier. She flat out said herself, "I wish I knew of this product earlier because the last couple months before my husband passed, he suffered tremendously." She wished she could have used some of these funds to alleviate not only her husband's passing and his suffering, but also for herself because she was on one meal a day due to funds being on a fixed income. This story hits home for me because of two primary reasons. One, she wanted to stay in her home and she loves it and that's where she wants to be. And two, these funds could have been used for healthcare needs, groceries, or whatever else Canadians in general are struggling with. Nonetheless, let's get into it. What is a reverse mortgage? A reverse mortgage is a type of loan that allows individuals over the age of 55 to release equity from the home that they live in, tax and payment free. Think about it like a mortgage that pays you instead of a mortgage you pay. The amount you are eligible for is based on the youngest homeowner's age at the date of advance, so when the mortgage funds are actually advanced to you. No payments are required until the reverse mortgage becomes due, so when a borrower sells their home, moves into a long-term care facility, or passes away. You can continue to own and live in your home just like you always have. What is the minimum criteria or requirements of obtaining a reverse mortgage? All borrowers on title must be 55 years or older. Your home must be located in a large town or city in Ontario. You must live in your home for a minimum of 6 months a year, and it must be your primary residence. And your property must be worth at least $250,000. So how does it work? You can borrow up to 55% of your home's value. How much you can borrow depends on your age, your spouse's age, your home value, and the location of it. You may take the funds up front as a one-time lump sum payment or in the form of scheduled advances, for example, $1,000 a month or $2,000 a month, or an on-as-needed basis. You must pay off and close out any outstanding loans or lines of credits that are secured by your home, for example, conventional mortgages or HELOCs, home equity lines of credit. These must be paid off by the mortgage funds that you receive, which then takes place as the first mortgage on the property. We should note that funds from the reverse mortgage can also be used to pay off other debts, and you have the option to make monthly interest payments if you want. Additional payments may be subject to prepayment charges, which will be discussed by your mortgage professional or your lawyer. The loan comes due in a couple of ways. It could come when you sell the property or transfer it. It could come 180 days after passing of the last borrower on title. In this case, the estate would probably take care of this at that point. Or it could be 1 year after the last borrower moves into a long-term care or retirement residence. And lastly, upon default, which only occurs if there is failure to pay property taxes, pay maintenance fees or condo fees. You have to maintain home insurance or keep the property in good standing. All things that you've done throughout your lifetime while owning a property, so nothing changes. We should note you cannot default on this mortgage in any other way because there is no monthly payment like a traditional or standard mortgage that we are typically used to. I wanted to add an example of the interest accrued and some home appreciation over a 10-year period. I just kind of wanted to put it into a graph or a visual that you guys could see and understand pretty easily. So as you can see, we have a property value of $1 million. This individual is obtaining a reverse mortgage in the amount of $300,000, which leaves them $700,000 in home equity. If we fast forward a year from the advancement date of taking on the reverse mortgage, the property value has increased by $30,000, and that is simply because I'm using a very fair annual appreciation rate of 3%. Some people see this as too low, but I'm a conservative person, so these numbers can differentiate significantly if you do the math with 5 to 6% annual appreciation on the home, which we have definitely seen over the last few years in the GTA or the Toronto region. The interest accrued is just under 25 grand in year one, which leaves your home equity at approximately 705,000. So not much has changed when you're looking at the paper value within the home. If we fast forward 10 years and still assume the 3% appreciation all throughout the years, we can see the home value is just over $1.3 million, and the interest accrued is approximately $366,000. We should note that the home equity in this scenario hasn't changed much from year 1 to year 10, and the interest accrued is being counterbalanced by a market that is consistently appreciating over a 10-year span. So it's not something out of the question to not only maintain some home equity within your home, but also maintain the lifestyle you are looking for when obtaining this sort of mortgage. All the numbers above were based on a standard 5-year fix at 7.99%. I'm not saying that's where the rates are at right now. It's just something that I use to provide a visual for you guys. Why should you consider a reverse mortgage? It allows you to age in place without selling your home. It enhances monthly cash flow, and you can use this additional income for whatever your goals are. It could be to eliminate debts, purchase a new property, vacation around the world, pay for medical bills, renovate your current home, and so on. It is also an ongoing tax-free payment. There is no monthly payment needed. However, I do want to emphasize that this loan is accruing interest, so no, it is not free. As time goes on, you do lose equity within your home, unless of course home appreciation is at par or above your interest costs. It also can be used to help family, for instance, assisting them with down payments for maybe your children or your grandchildren, gifting them money for their education, or simply an early inheritance. I now want to skip to some of the common misconceptions that are holding people back from either looking into the reverse mortgage space or even just taking them on in general to change their lifestyle. So, number one, with a reverse mortgage, you no longer own your home. This is just false. You will always maintain title, ownership, and control of your home as long as you meet your mortgage obligations. Number two, you will owe more than the value of your home. This is also false, as most reverse mortgages come with a no negative equity guarantee. If the homeowner has met the required obligations, the amount you will have to pay on the due date when this is due, it will not exceed the fair market value of your home. Another myth is that your heirs won't be able to inherit your home if you get a reverse mortgage. This is not the case, as they will always have the option of keeping the property by paying off your reverse mortgage after you pass. Here's a good one that comes up a lot. You will be taxed on the reverse mortgage cash you received. This is not true. All the cash you receive is tax-free and does not impact your old age security or Canada pension plan. Lastly, if I have poor credit, I won't qualify for a reverse mortgage. This is actually a good question. It's not entirely true. Unlike a regular mortgage, credit score and income are less important. In fact, your age, property type, and location are way more important in this scenario. They are still regulated mortgages, so income and credit score will be verified, and it's required by the law. So what steps are needed to obtain a reverse mortgage? The first step is apply and receive a conditional approval. I should say, even before doing that, I always jump on a call with the potential clientele to understand their goals and see what they're looking for. From there, we can discuss if this is even the right type of mortgage for you. After that, we'll get you to complete an application, submit some documents to us, of which we will review and then submit to the bank. If eligible, a conditional mortgage commitment is then issued to you guys. This includes the amount that you may qualify for, the interest rate, the term, certain fees, and a schedule of advances if that's applicable. That mortgage commitment should then be signed and returned as soon as possible. The second step is the easiest one. It's getting a home valuation through an appraisal, which will help you order. Step 3, meet your lawyers. Depending on the closing arrangements you've selected, your closing lawyer will manage the closing process for you. You'll also need to meet with a lawyer of your choosing for independent legal advice. They will ensure that all parties understand the risks and benefits associated with the mortgage commitment that you received. They need you to understand what you're signing. Step 4, close your mortgage. Your closing lawyer will receive the closing documents to finalize the mortgage funding and will confirm the method to receive the funds. That could be through direct deposit or check. Before any net proceeds of the mortgage are dispersed on the closing date, your closing lawyer will also arrange to pay any outstanding mortgages and any other applicable debts as outlined in your mortgage documents. With that being said, I quickly wanted to go over the setup fees and costs involved. You'll need an appraisal, which can cost anywhere between $300 to $800. This is obviously dependent on your home type and location. You'll need independent legal advice, which can cost anywhere between $450 to $700. And lastly, you'll need to pay for other legal fees and admin costs, which can range from $1,200 to $2,500. All of these are simply estimates and can differ when actually closing your mortgage. I do want to add that all of these can be deducted from the reverse mortgage funds that you've received, so you don't have to pay them out of pocket initially. The only one that you have to pay out of pocket initially is the appraisal fee. And that is it. So the overall goal of this presentation was to make sure you understand the reverse mortgage product better. This product is becoming more prevalent throughout Canada, and that is simply because home values have increased significantly, whereas incomes have not over time. This has ultimately pushed those over the age of 55 to make a decision as to whether they would like to remain in the home that they love or sell and go and rent. With that being said, I want to thank you for sitting through this video. If you have any questions about the reverse mortgage products available in Ontario, please feel free to reach out to me at 289-231-3152 or by email, which is anthony@owlmortgage.ca.